All right. So we're going to talk about the COVID-19 pandemic and Money Management 101. And even though this is a pandemic from a health standpoint, it's also a pandemic almost from a financial standpoint, because you've seen our economy just really take a hit. And what we're trying to do here is just help people manage through that process of seeing, what they can do in order to maintain a household, maintain their finances, pay their bills, and then also take advantage of some of the opportunities that the government has laid out for us and how we can manage that process and get some monies in our pocket and continue to maintain our economic status. And so what we always talk about is it's not really the national or the world economy that matters, but when it comes down to it, it's really your own personal financial economy. And that's what we're going to be talking about here today. So the CARES, or the Coronavirus Aid, Relief, and Economic Security Act, that is the federal law and program stimulus plan that we are looking at today. And this particular image here, it's by the nonprofit Times, but what it does is just gives us the ability to look at this $2 trillion tax relief bill. And what it's going to consist of is money that's been sent directly to Americans from federal and state agencies, unemployment coverage as far as from the state agencies, and then it's also going to be student loan changes where people who have student loans are going to have that ability to defer some of those interests and some of the payments there. There are also some things as far as retirement account changes that will also take part here. And the last thing is taxpayer relief. So those are the things that we'll be discussing here today. So the biggest thing that people normally talk about is the stimulus check. I think that's gotten the most information and headlines here. And so when we look at the stimulus check, as far as individuals here, people will get $1,200 for individuals if their adjusted gross income is $75,000 or less. People who are married couples, you'll get $2,400 if their adjusted gross income is $150,000 or less. For the heads of household, $1,200 for adjusted gross income of $112,500 or less. Now, you also get $500 per child who is claimed as a dependent. Now, what that means on the child is those are kids under age 17 from a tax standpoint. Those are what we consider children as far as from a tax standpoint. Is there any questions there that have come in, or do you like to share at this moment, Marsh? Because I know that's a big thing here, and I'm going to pause my video for just a moment here. Is there any questions?
Yes, there is a question. Will this money have to be paid back?
So Marcia, the money will not have to be paid back for this, and there's a couple things here. It will not have to be paid back because it's from the stimulus, and also these dollars are if you qualify in 2018 based on your taxes, or if you qualified in 2019 and then you find out to not be qualifying, then it still counts for you. So that's a very important point, but no, it will not have to be paid back.
And we have another question. How does this affect college students over the age of 18?
Very good point. So there are a few people that are left out of this particular stimulus check here. And one of them are college students who are over age 17 and under age 24 because they don't file their own taxes. And if they are dependent on someone else's taxes, then they do not qualify for this stimulus check. And so what I would encourage people to do is if you're on your own and you make your own income and your parents are not claiming you, I would go in and file a claim or file a tax return in order to see if you qualify for the stimulus check. And also the IRS has put a website up in order to allow people who initially don't get a check to go in and put their information in to show that they qualify for the check. So there's a few different ways that people can opt in to getting the check.
Okay. Do you have to have the 2019 taxes paid?
Great point. So there's people who, very similar to myself, we wait and file our taxes from an extension or the last moment possible. So if you have not filed a tax return for 2019, they will look back at your 2018 tax return. And the other thing is, if you don't have a 2018 nor a 2019 tax return, you can go to your Social Security benefit statement and give them the information that has been reported on your behalf.
Okay. And there is another question, and you may want to answer this as we continue through, but the question is, are there benefits for folks who have dependents who are not minors, but have elderly parents or siblings that they may care for?
So we will talk a little bit about that. That will come into where we talk about the unemployment, that you will be able to, if you've been affected by the coronavirus, you may be able to apply for some benefits under the unemployment insurance or even some of the loan programs that are available there, but not as far as getting a stimulus check for those particular individuals.
Okay, now if there's a dependent child that's working and has their own income, what do you suggest? And this will be the last question we answer, Linsey, before we move on. Okay. Okay.
Well, Marcia, what I would suggest is if that person is truly providing more than 1/2 of their own expenses or paying for those, then they need to file as a dependent, as an independent, and don't file as their claim as a dependent on a parent's tax return, because they're able to file their own tax return, and then that will give them the ability to opt in and qualify for the stimulus check.
Okay, thank you.
Okay. So the next thing that we'll talk a little about here is what happened as far as taxes. Well, due to the COVID-19 outbreak, tax day is now July 15th rather than April 15th. And that also applies to people who are paying estimated taxes. They're deferring also payroll taxes. So there's a lot of delays or extensions that have been provided based on the COVID-19 or coronavirus outbreak. So just understand most taxes that were due, even nonprofit taxes, partnerships, and S-corps have been extended to July 15th rather than the original April 15th date. Now, what I would say to people is make sure that you check with your state to see if they would allow you to also extend to July 15th. Some states like North Carolina will allow you to file on July 15th, but you still have to pay the taxes that are owed by April 15th to avoid penalties and interest on the amount that's owed. All right, so we talked a little bit here about some of the payroll deferred relief. Businesses can defer 6.2% of that portion of the FICA taxes. That's what I was talking about. So here is just some details of what we were discussing on what would be delayed as far as payroll taxes that were deferred under the CARES Act. Also, for self-employed people, you normally have to pay your own self-employment taxes, both yours and the part that's matched. So that is also deferred as far as you paying those quarterly payments or monthly payments for your employees. The other thing that we have is most people don't understand or didn't realize that you can borrow from your IRA under the CARES Act. IRA owners are eligible to take related distributions related to the COVID-19 virus. These distributions are called CVDs, or COVID virus distributions. You can borrow up to $100,000 or 100% of your IRA, and if you pay it back within 3 years, that withdrawal is considered tax-free or a tax-free rollover. But any part that you do not pay back within that 3 years would be counted as income, but you still would not have to pay a 10% penalty on there. So all that to say is most people, when you take a distribution from your IRA now, or before this happened, if you were under age 59 and a half, you would have to pay a 10% tax penalty on any dollars that you took out, plus counted as income. Now you're able to defer those dollars as far as coming in as income, and you're also able to avoid the tax 10% penalty there. Okay, any questions on this particular topic?
Yes, do you know if this would could possibly be backdated, possibly for anyone that took money out last year?
No, it cannot be backdated for last year. It's only for what we're looking at here. It's for a 2020 tax year. So everything we're talking about is related to 2020 taxes, and even the stimulus checks are considered a advanced credit on 2020 taxes. So it wouldn't apply to 2019.
And do individuals, I guess, just need to reach out to their IRA companies to make this request and to have it processed?
So what they would do is, normally when you take a distribution from an IRA, you'd have to fill out a distribution form, and in there it would have some boxes that are checked. Do you have an exception, or why are you taking this out? And I'm sure they're going to add a box now that says it's related to the COVID-19 pandemic. So if you check that box, then that would allow you to utilize avoid the 10% penalty. And also, when you complete your taxes, you can elect on the tax form to utilize the 3-year withdrawal, and then every year during that 3 years, you'd have to elect that you're still continuing to use that 3-year withdrawal period. And if you don't pay it back or defer it after 3 years, then you would be taxed on it in that 4th year that you did not pay, whatever amount that you did not pay back for there, because that would be considered a early withdrawal. And so you would pay, not early withdrawal, just a withdrawal, and you would just pay that back because you wouldn't have the 10% penalty.
I think that's all for now. Thank you.
Okay, thanks for the question. And then we have the situation where people may not be in the tax filing system, and so we're trying to determine how would they opt in. And so if you go to the irs.gov, they now have a button there that you can click on to apply for or opt into the stimulus package. It's called the free file fillable forms, and it will take you to this site right here. When you will click there, and if you are someone who is, maybe you're getting disability compensation, you're getting a pension or survivor benefits, or Department of Veteran Affairs benefits, and your level of income doesn't require you to file a tax return. Well, if that's the case, you can go to this site here and you can put in your information, and it will opt you into the to get the stimulus as far as in the IRS. And it does not require you to file a full tax return, but it does allow you to opt in. Now, this isn't for people who are getting Social Security or Railroad Retirement Benefits or SSDI, because you are automatically opted in. If they see that you're getting any of those benefits, you're considered to be a tax filer, and you will receive a stimulus check. If you've already filed your 2019 tax return, you'll also get your stimulus check, or it'll be in the system. If you were married at the end of 2019 and are not submitting information here with the spouse, so these are the reasons why you would not. And if you were not a citizen or a permanent resident, then this wouldn't apply to you also. So So this is for people who just do not file taxes because they don't make enough money or because their income is not taxable. They can file or opt in to make sure that they are included in the distribution for the stimulus checks.
Linsey, I wonder, for marginalized communities and folks that may be vulnerable, do you think that this information is actually being pushed out to them in an effective manner from what you've seen?
Well, this is very new here. Matter of fact, I found this this morning, as far as they just came out with this form on the IRS website where you can click on here and opt in. Prior to, they did have a situation where they were leaving out people who had Social Security and didn't think they were going to count them in as taxpayers. But we all know that senior citizens are the #1 voters, or the biggest block of voters. So they quickly changed that and made it such that people who get Social Security will have the ability to get the stimulus checks, but also that they would not have to file a tax return in order to get that, because what that would have did is all the people who get Social Security are not required to file. They would have had to file a full tax return. So now what they're going to look at is anybody who's getting Social Security or government benefits. If you're already in the system, as far as they can tell that you're getting income or Social Security benefits or disability, they're going to just opt in and just send you a check if they have your information on file as far as a direct deposit. Or if you're not getting direct deposit, they will send you a check out. Now remember, the checks will be much later than those who have information on there as far as direct deposit because they have to actually process the checks. We think they're going to come out with a website or another opt-in similar to this, where people can upload their bank account information if it's not already in the IRS database.
Okay, thank you.
You're welcome. Great question. Thanks for asking. Now we have the virus effect for U.S. unemployment. And this here is one of the main reasons why you see the stimulus checks, you see the interest rates going down, you see the Federal Reserve going into effect, is because our unemployment rate, even back since 1967, we had 350,000 claims. Well, you'll see it even in the 80s with the recession peak, we had almost 700,000 claims. And then the global financial crisis, we had 665,000 back in 2008. Well, you see here now, March 21st, we had 3.3 million unemployment claims. And then the following week, it soared to 6.6 million unemployment claims. So what that really means is the economy functions by people buying and consumer purchases. Well, if people don't have money in their pockets, then they can't spend and they can't make this economy go, because if there's no revenue or money generated through the economy, there's no taxes generated. Companies, restaurants, airlines, any company that you can kind of think of, if there's no money flowing through, just like your circulatory system, if the blood is not flowing, you die. So if the money or cash is not flowing through our economy, the economy actually collapses. And so that's why you see all the stimulus checks, you see all of the policies are being changed and laws are being changed so that we can get money going back through the economy and to weather this storm here. So in the response to that, you have what we call the Unemployment and CARES Act. And what this does is this broadens out who is considered having the ability to claim being unemployed or underemployed. And so what you see now is if you're not currently working, if you're teleworking or if you're on paid leave, you may be eligible for one of these unemployment programs. So you see the regular unemployment program at first is where you have the additional $600 per week up to 26 weeks. Who is eligible? Anybody with past wages and a qualifying separation. Now that's basically is somebody who was just unemployed and they filed an unemployment claim, they were able to get up to 26 weeks of separation, but that was when we had our regular unemployment. They would just fill out the application, and then if they're unemployed based on the COVID-19, that would also trigger it. And it's an ongoing state program. Now, what you have to do to apply for this is just go to your state's unemployment insurance department online, or probably just a bit online now because the offices aren't letting people in, but just apply online for the most part, or call on the phone if you're able to get through. Then we have the Pandemic Emergency Unemployment Compensation. Now, this here, what it does is it brings in not only regular employees, but it also brings in gig employees or gig economy people. They can now apply for unemployment if they are not able to do business or bring in revenues. They can also apply, and this adds up to another 13 weeks after the regular unemployment is exhausted. They just fill out the application, and it also applies to the COVID-19. Now, the last payment for this one is going to be December 26th of 2020, so it's going to last through the end of the year. And if the economy still is in disarray, they might even extend this for longer. And then we have the Pandemic Unemployment Assistance. This is what draws it out to another 39 weeks here of unemployment. This is where it really brings in the self-employed contract workers, and then this also brings in people who are getting ready to be employed, but they were not able to take the job because of the COVID virus. And once again, it's all through your unemployment insurance program with your local, with your state unemployment office. So I'm going to take a moment here. I know I've talked about a few things there as far as unemployment, who qualifies, and how you would be able to apply. Is there any questions out there?
So where should people go first? Should they first go to their state unemployment website, and then will that lead them to additional information about other forms of unemployment compensation?
Yes, Marcia, that's a great point. What I would advise people to do is go to their state's unemployment office website and just go in and opt into the system and start filling out the application. There's going to be several questions there about, what your past income was, when would you start being unemployed, or what business were you in, and how much money did you make, or how much were you projected to make. And then your unemployment office will make a decision on what benefits you qualify for based on that, based on what the application that you filled out there.
Okay. Can college students scheduled to graduate in May of this year apply?
Yes, that's a big contingency here of people, because those folks may have been offered a job, and that job may have gone away, or that job may be postponed or deferred, or they might be furloughed, so they can also apply to get assistance because they were scheduled to go to work or affected by the COVID virus there. They just have to prove that they were in the process of getting a job, or even if they were working a work study. I think most of the colleges are going to honor those work study, but if there's something happened where you were doing work study and you're not getting paid anymore, or a co-op or internship, then that also qualifies to get the benefits.
Okay, thank you. That's great information. I think we can move on.
Okay. So this here is really just a scenario and benefits that are available, and it combines not only unemployment insurance, but it talks a little bit about what you able to receive or benefits at your company. So you see we have paid sick leave. If you have paid sick leave at your employer, just go through a checklist and just see all the ways that you can exercise that benefit there. If you have the COVID virus, you're mildly ill or severely ill, those are all kick those into place. Now, under the unemployment side here, you would go down to where it says the employer must shut down due to a quarantine. Anytime the employer shuts down or reduces your hours, then under the current law, you are eligible for unemployment insurance. Now, under the emergency rule, which is that third column there, if you have any mild symptoms or you were quarantined, your worker, the immune system was compromised, any of those things. And so what you start seeing is under this emergency rule, unemployment insurance comes into effect for just about everything on the list, and unless the employee just stops or doesn't go to work because they don't want to go to work. Now, if you're a nurse or in a position where you just don't feel that you want to go to work because based on this, then you really can't apply for unemployment insurance because you are opting out on your own. You weren't not able to go to work because of the virus or because of the situation. Then we have, which has been ongoing, the Family Paid Medical and Leave, FMLA. That's for people who have severe COVID-19 symptoms or they're caring for a sick family member. Those would come into effect there. And then the last one, the industrial insurance program, that is for healthcare workers and first responders under quarantine. They have brought that in where those folks are able to get benefits because they've been working in an environment that actually caused them to get affected and not be able to work anymore. So this list is still a work in progress, but at least gives you all the scenarios of benefits that may be available. And like I said, it's continuously updating.
And where do folks go to access these benefits?
Now, it's normally going to be through your Employment Security Department, and you would notice that this one is published by the Washington State Employment Security Department. Each of the states have their own benefits and charts and how this works out. And I've seen several states use this particular chart here as a kind of a checklist or a guideline for people. But I would just say, once again, check with the Employment Security Department or your unemployment insurance, and they will be able to guide you through what you qualify for. But just opt into the system by submitting an application, and then you will be able to see. And also people who are currently working can check with their HR department to see what they qualify for as far as their paid sick leave, their paid family medical leave, and then the industrial insurance. And if you're still in contact with your human resources department, that can be your initial call because they can help you file the unemployment insurance too. I think the states now are allowing employers to do group or batch their unemployment claims for their employees, and so it's making it easier for them to file those claims.
Thank you.
Okay. So the next thing we have here is the Paycheck Protection Program, the PPP. That is where companies are able to apply based on their payroll. And then we have that in contrast to the what we call the idle loan, the Sba Idle Loan. That is where companies, or individuals are able to apply if their businesses are less than 500 employees. They can apply for an operational type loan to keep their businesses going. And what we'll do is we'll kind of compare and contrast these here, but this list just shows you on the left side is the Purchase Protection Program, that lending tool. And then on the right side, we have the Idle Loan Program. So what we're going to do in the next couple slides is we're going to go through each of these and just see how they are, the specifics of them. So under the Paycheck Protection Program, you'll see that small businesses, entrepreneurs, sole proprietors, independent contractors, and private nonprofit 501c3 or 501c19 designation companies, just about all companies with less than 500 employees are eligible for this program. Now, this program is geared towards payroll. And so what that, excuse me, what that really means is if you have a payroll and you are filing 941 quarterly reports, it's trying to help you keep those people on the books as far as payroll, and you can apply for this loan in order to continue paying those employees that you have. It also includes in there mortgage interest, rent, utilities, interest on debt incurred before. Now, this can't be a loan that you got after February 15, 2020. It's for any employees or people or thing that you had before February 15, 2020. And you had to be in business before February 15th of 2020. Now, the way that this is calculated, it takes your monthly payroll and you multiply it by 2.5, and that will be the amount that you can receive from this particular loan. It can be up to $10 million, but you have to qualify based on your payroll. So if your payroll is $4,000 a month, then you multiply that by 2, it's 8,000, and another half would be another 4,000. That could be $12,000. So what you'd have to do is go through that calculator, and you can compute how much you're able to apply for each employee that you have. Also, these loans have a fixed rate of interest of 1%, no payments for the first 6 months. And if you use all of these dollars for payroll, then they could be forgiven. And you can only use, as far as for the given amount, it has to be 75% of the money used for payroll rather than operating expenses in order for you to be forgiven the loan. Now, the way that you apply for this particular loan is through your local bank or credit union. Okay, so if you already have a banking relationship with your bank, then if that bank is an SBA lender, and all the major institutions, banking institutions and credit unions have opted in, or they're SBA credit loan officers, then you can just go to your bank's website and opt in and start applying. Some of the banks were slow to get started because it was very new to them a couple of weeks ago, so they weren't able to start to take applications. But once the doors opened, they applications started flooding in very quickly, and some of them had to shut down their websites because either it crashed or they couldn't handle all of the applications that they were getting. Any questions here?
So just thinking of maybe a practical example of this, if someone owns a neighborhood restaurant, maybe can you walk them through the process for obtaining this type of loan?
Yes, certainly. So if you own a local restaurant, and just say you bank with the local bank there, you would just go to your bank's website. It would say if they're Purchase Protection Program or PPP under the SBA, and you would simply go through the process of applying for the loan. Now, that application is going to ask you to submit your proof of your payroll, whether it's a payroll that you pay other people or payroll that you pay yourself, but it does have to be a payroll that you can prove or have documentation for that you were paying. So what I talk to some people about, if they're self-employed and they don't pay themselves a payroll, if they had a loss at the end of the year, then it'd be a little tougher to apply under this program because it's harder to prove that you have a payroll. But if you have employees that you pay on a monthly basis or a biweekly basis, and you're going through a company like a Paycheck or an ADP, and you already are doing that on a monthly or quarterly basis, then you can prove that you've been paying the Social Security benefits and all those things, and you actually have a payroll. Or you could be a sole proprietor or or a single member LLC and pay yourself a payroll, and that would count also. But it just has to prove that you have a payroll to get the benefits and to get them forgiven. So, but you can also include in, along with that payroll, mortgage interest expenses, your rent on your restaurant, the utilities that you've been paying, and interest on debt. So it does provide some additional uses, but it's primarily focused on companies or small businesses that have a payroll associated with them.
Okay, so for the PPP, must you have already filed 2019 taxes?
No, it doesn't require you to have filed 2019 taxes. It doesn't even require you to really be profitable, as long as you have a payroll, and it's not a credit-based type of a loan as far as qualifications. It's just basically, can you prove that you have a payroll and that your employees have been affected by this scenario here.
And so ideally, if someone received the benefits from the PPP, it's expected that they are paying their employees. Is that correct? If that's part of what's they're seeking. All right.
Yeah, and it is designed to help you maintain a payroll for those employees through June 30th. So this is not an ongoing program. It's only going to last through a couple months, through June 30th. So I always tell folks this is not a long-term lending process. This is to get you through about 2.5 months of payroll and expenses.
All right. Thank you.
Good questions. Thank you for asking there. So our next one is the Idle Loan, Economic Injury and Disaster Loan. This is where more people or more businesses will be able to qualify, because it doesn't require just payroll. This is really for operational expenses. So once again, you have sole proprietors, independent contractors, private nonprofits, and more are eligible for this program. Now, this particular program, you can pay for payroll, fixed debts, if you have accounts payable, any other expenses that can't be paid because of the disaster's impact. This loan is up to $2 million. So unlike the Payroll Protection Program, which was up to $10 million, this one is up to $2 million. Now, theoretically, they say if you apply for this loan, you can get a cash advance up to $10,000 before you even qualify. However, with all the hundreds of thousands of applications that have been submitted, that 3-day cash advance is not it's not in reality. It's in theoretical terms. But the way that they have it listed is you could get a $10,000 advance if you qualify. We're just waiting to see how the process works in reality there as far as people applying. Now, this particular application here takes a couple hours to complete. It's what they list on the website, because you're having to provide several pieces of information, and there's a qualification that you have to go through. Unlike the PPP, Paycheck Protection, it is you don't have to qualify as much. This loan here also has a 3.75% rate for interest rate for businesses, and 2.75 for eligible nonprofits. Now, for this one, you will go to the SBA.gov website and apply for this loan. It will not be through the bank lenders in general. It will be through the SBA is how you qualify for this one. It can be up to a 30-year loan with no prepayment or early payment penalties. And then a cash advance is at the same time of the loan in theory. So you'll be able to do that. Like I said, this one is for operational expenses, not just for payroll. And so more businesses will qualify for the Idle loan than the other loan there, the PPP loan.
So the There's a note on here that says applicants can also apply for a $10,000 cash advance that if used appropriately will not need to be paid back. Do you have any information on that? That may be useful for a number of the nonprofits that exist.
Yeah, that's what I was talking about, is when you submit the application, in theory, even before your application is approved, they could advance you the $10,000 to get into your pocket, and you may not have to pay it back if everything is for operational. However, in theory, with over 100,000 people applying for the loan, in theory, the money's is not getting out the door that fast, because people aren't getting the $10,000 very quickly within 3 days because of the glut of people applying. But that is a provision of the program, is there's a $10,000 cash advance potentially available to people who apply. It's just, in reality, it's not working like that because so many people are applying for the loan.
Okay, so I don't think we have any more questions, but there is a comment that this is really good information for nonprofits that our Giving Circles work with. And I think we all can agree with that. So we definitely want to try to take this back to our grantees and share this information with them.
Yeah, what I suggest people do is, you almost have to, with these loans and programs, you almost have to have someone kind of dedicated to going through the process, because it does take some time and it will require you to gather lots of information as far as from your payroll or from your operational expenses and submit that. So it does take some time. And I do know some smaller companies who have just said, well, during this time period, we're going to dedicate 1 or 2 people to just work on gathering the information and going through the process of applying for these loans, because it can take some time. But if you get through the process and then it works out, it could be a very valuable return on investment of your time.
Thank you.
All right, and so here is just a chart that shows the Paycheck Protection loan submission process. You submit, excuse me, you submit the initial request. You receive a confirmation by email. Most people are in this process now where they receive the confirmation email and then they're completing a registration with the Secure Loan Document Portal. Remember, this is going through your local bank in order to qualify. So it's a little bit easier process because you're going through your bank. Then fourth, you will submit applications supporting documentation. And then many people are just waiting on confirmation of approval because there's just so many people in the pipeline that's applying at this point in time. Okay, so at this point, I want to just take a pause and see if there are additional questions or information that people want to discuss or talk about. There's so many other provisions within this $2 trillion bill. It's hard to cover all on one call, but I did want to let people know that I'm available. If people want to contact me by email or by phone, just to go through a scenario with them and see how they can apply or get into the process of getting one of these grants or loans. Most of the accountants and folks like myself, we're still in the process of filing people's taxes before the July 15th deadline. And so a lot of times the primary people who you can rely on to get this information out to you and help you apply are those same ones who are up against a deadline and social distancing and all those things in order to run our businesses. So we're kind of caught between a rock and a hard place, because we can't help people apply because we're trying to help people apply for their taxes and things. And so it's a little difficult now, but I'm willing to help in any way that I can and answer questions for people as they go through the process.
Okay, thank you, Linsey. We do have a few more questions. One question is, any caution on how to protect yourself from fraud? Should you receive calls to provide information, emails, etc., to get your stimulus check? Really thinking a lot about seniors who may be targeted.
Yeah, I would say, well, just know that the IRS would never reach out to you to provide any passwords or information through online or email or call you. They're only going to send you letters. And then there are companies that are posing as SBA, posing as the IRS, trying to get people to release information. What I would say is only go through your local bank or a bank that you already do business with in order to apply for any of these loans, or for the Paycheck Protection loan. Or if you decide that you want to go with the Idle loan, go straight to the SBA.gov website and apply through there. Don't reply to any emails, unsolicited emails that come into you asking you for information, because it's probably a way to get your information and then file on your behalf and maybe get the dollars that you would be qualifying for.
Okay, excellent, excellent. Now, if you owed federal taxes for 2018 and you have not paid them, or maybe if you are repaying taxes from previous years, or possibly having your paycheck garnish, will you still get the stimulus check?
That's a very good point. So if you have back taxes, they are not affected by the stimulus check. Your stimulus check will still come to you. If you owe past student loans or in default, that doesn't affect it. The only thing that will affect your stimulus check that they're thinking is if you owe back child support, that might affect your ability to get your stimulus check. But that's the only thing that we've seen that they have not waived as far as enforcement of back taxes or penalties or being able to get your stimulus. They're trying to get money out to consumers so they can get, pay bills or spend or to get that moving into the economy. So nothing other than child support that we've seen that would affect a person getting a stimulus check at this point.
Okay, I think this question switches gears just a little bit. Let's a little bit from the CARES Act. There have been a number of opportunities, there's been a lot of information shared and distributed about individuals calling their mortgage companies or credit card companies to possibly delay paying those bills, and just want to get your opinion and if there are any cautions that people should take related to delaying monthly bills.
So it's a very good point. What I would suggest is that people contact their mortgage companies if they need a forbearance over a month or two. Just call them directly and you submit your information, and the mortgage company will make a decision and get back to you as far as if they're going to allow you to waive or skip a couple payments and then add that onto the back of your loan. I know that several people have done that, and so what I would encourage people to do is, if you are in a situation where it would be a struggle for you or financial difficult for you to pay your mortgage, pay your insurances, your life insurance, your health insurance, pay your car payments or any of those things that you have, or even your credit card payments, go ahead and proactively contact the companies, let them know that you are affected and get into their process and let them take you through that system and give you a confirmation that that is complete. And what I would encourage people to do is make sure that you get something in writing such that you don't get to the point where you thought you had a deferral and they come back and try to take adverse action on you. So I would call your companies directly, whether that be your mortgage company, your landlord if you're paying rent, your utility companies, and your car payments, and to ask for that ability to defer payments or delay those. Now, on the insurance side, the health insurance, the life insurance, disability, what they're doing is they have stated that they would give you a couple months of not paying, but within those 2 months, after those 2 months, you have to catch those back up in order for your health insurance, your life insurance, and your car insurance to be enforced. So I would confirm what those rules are and parameters before you skip those payments, and make sure you get a confirmation and something in writing. The other thing is, I know they stated in New York last month, this month, April 1st, there was $20 billion in rent that was not paid to landlords. And so what they've done from a federal level, they have stopped, put a moratorium on people being kicked out or evicted because not being able to pay their rent. And so one of the things that's within this $2 trillion stimulus is landlords are getting some relief too from paying their mortgages and some other financial benefits to allow people not to have to pay rent in this situation. So you always talk about both sides of it. If you don't pay rent, there's somebody else who probably can't pay their mortgage, which is the owner, property owner, or can't pay their taxes or the insurance. So there has to be a full effect here as far as the government allowing not only that renter not to pay their rent, but that landlord not to have they lose their home or lose their property because they can't make the mortgage payments. So it's all hands on deck as far as this is concerned.
Okay, thank you. Is there any caution that needs to be utilized if folks choose to take the IRA distribution? How can that best be used, or what's the worst way to use that distribution?
Yeah, so that one is a little dangerous because you are taking from your retirement. However, I tell people is, if you have to use it in order to, put food on the table, to in an emergency situation, that's why they waive the 10% penalty. But remember, if you take those dollars out, those dollars are gone and they are for your retirement. The other thing here is if that money is in a mutual fund or stocks or investments, if you take it out during this period of time, you're probably down 30 to 40%. And so you're locking in those losses and you probably can't make those back up, especially if you keep it out for more than a month or two, because the stock market will probably bounce back as money starts flowing through the economy. So I would say that would be the last place that I would take my dollars from because of all of the just all the variables there. The market is down. You'll have to pay it back within 3 years, or you have to count that as income down the road. It does affect your ability to retire at some point. So that would be probably the last place that I would utilize to take monies from, unless I had the ability to know I could pay it back within that 3-year period and not be affected by the opportunity that's lost with the market being down at this point.
Okay, thank you. And we have one more question, and then we'll let you have some last words before we transition to the last part of our session today. So as a financial advisor, are there any tips or guidance on managing your money as you are dealing with the emotional, the psychological effects of job loss, not having enough savings, the uncertainties that are coming with this time, if you're, or the uncertainties associated with not knowing if your job is going to come back? And, what can we do to protect our economy or use this opportunity to learn from these financial challenges and or to increase our financial literacy?
Well, first thing I would advise people to do is you look at this time period as, a lot of people learned from the financial crisis of 2008 that they need to have cash on hand, 3 to 6 months of living expenses, because, we always say that, but people don't usually exercise or use that, or people aren't in a position where they have additional dollars or extra dollars to put aside for these types of events. Now, this is from maybe a once in a life, hopefully only a once in a lifetime event here. But I always encourage people to, whatever you can do is put some monies aside, 10% if you can every year. In 10 years, you'd have 1 year of annual salary built up. The other thing here is, don't get overly anxious about it, especially I've had people call me and say, well, I won't be able to retire for another 30 years now, and I was scheduled to retire maybe in 5 or 6 years. Well, you notice that anytime the entire economy goes down at the same time, all the policies, the federal government, the president, the Congress people, everybody goes in, all hands on deck to try to get the economy going again. Now, there might be some individual companies, maybe several individual companies that go out of business because just the business models change, but they're not going to let all of the S&P or the largest companies go out of business, because if they did, then your money is not worth anything because you don't have anywhere to spend it because nobody's in business. So for folks who are investing in the market, and your 401k and mutual funds, I would encourage people to continue to do that. Even if you have a little extra cash on the side that you can don't have to use for your everyday living expenses, now is a good opportunity to put some of those dollars in and put those to work, because in 3 to 4 years you will see that I would think a good return on those investments. Now we have the other side where people are just struggling, and their income has gone down to zero. And so what I would encourage those people to do, especially in service businesses or restaurants or hotels or folks who are massage therapists, I would encourage you to look at every loan that's available or opportunity to get monies from this the stimulus program. I would also encourage them to make sure you talk to family and friends and seeing what they're doing in order to weather this storm. Just be careful about going into your retirement or your investments to take those dollars out at this point in time, because that will come back to hurt you as the market starts going up. But at the end of the day, it's all about survival of the fittest at this point. I tell people you still have to put food on the table. You still have to make sure that you have a shelter and a household to live in and protect yourself. So just make sure you're checking on people who are living alone, who are not able to socialize or talk to people on a daily basis. I know I've been doing that for at least my mom, who lives by herself. I call her and check on her more often than I used to, just because you want to just check on people to make sure they're doing all right. Anxiety is high at this point in time. So we're all kind of in this together. So do what you can to help others, and we'll all get through this within the next several months or so. We'll come out of here hopefully stronger.
Thank you, Linsey. And so everyone can see Linsey's contact information on the screen. And so, Linsey, if you don't mind, maybe we can share your actual slides with people that were on today's call. And we'll also try to capture all the question and answers and share that information as well. And as I mentioned earlier, we will make the recording of today's session available for everyone. And so, Linsey, thank you again. I think that everybody appreciates you being able to make it plain and clear for us, because there's a lot of information about the CARES Act. And then I think that for us, for people of color, it's important for us to know exactly what our benefits are, what our options are. But we don't want to step into any landmines either, or trying to take advantage of everything. So with that, thank you so very much. And any last final thoughts or words that you'd like to share with everyone?
Well, Marsha, I'd say I appreciate the opportunity to work with CIN, and this is just another way that the network is valuable to not only the members, but people who are associated with it, because there's a lot of information that's out that people just can't sift through. So it does take some folks with just have a little bit of knowledge on how things work in order to sift through some of that information and share that. So I appreciate the opportunity to come on and share this with people. And also I'm willing to answer additional questions as people have those throughout the next months and days.
Thank you again.
You're welcome.